And a good, wonderful morning to all of you out there in the YouTube's world. Welcome to the official Trade Talk channel, where I show you how I analyze price for the most consistent and higher probable entries to help you all become better traders. We just had the PCE. Sorry about it getting on it a little bit late because, issues. But moving on, we're going to watch it from here on out. See if we can't find something to trade today. What we're currently watching is Bitcoin has made a run above today's high. You can see that we are watching $17,167. That is yesterday's close. We had a really, really good news yesterday. Well, not good news, but the market took it as good news when we had Powell's speech. The first reaction that we got, however, in the morning was bearish off of the GDP. Stronger economy. I guess the market was taking that like simply that they could raise interest rates even higher. But then once Powell spoke, it's almost as if though they used the news was used by price in the morning to make a run down below the lows. You can see this wick right here was the lows. After you made a run below the lows, these are hourly candles here, so it took a little bit. We got the news, and then boom, shakalaka, straight to the mountain, all the way up. I mean, that was a phenomenal, phenomenal trade. We were watching calls on the spot or on the SPY. We bought them Tuesday on the stream. Those calls ended up paying us hugely yesterday, so we're doing good this week. As far as any trades to take today, I have a long position on Bitcoin, and my long entry is down here at 16,344, not 355. But on the Bitget platform, that was the entry, 344. It was based off of hourly support. So price traded in, set in support right here, and then you can see 3 or 4 hours later, you got a retest of that support. That's when I took my long entry. Stop was just below the wick low of this bearish candle. And as you can see, that position is doing really nice. So, I mean, if one wanted to try to short into strength, because ultimately on the daily, Bitcoin still does look bad. It still is a bear market. This is still a bear market rally. Until you start making higher highs, that's what you got. The S&P 500 has literally liquidated so many shorts this week. Why was everybody short? Well, simply because it's a bear market and everybody's looking at this rally as a fadeable event because the world is ending. You know what I'm saying? The whole world is collapsing around us, financial problems, everything is bad. So let's short it, 125x short, and see what happens. But that's not what happened. We were expecting an upward move, and we got that. We will go into why we were expecting that move here in just a little bit. But if you did want to short into strength, then you would be looking to take your entry as close to 17,167 as possible, and your stop would be above the high of day. That is now a very wide trade. Right? It's not something that I like to do. I do not like my entry and my stop to be so wide apart. Naturally, that means you got to have a much bigger move to make money off of the trade, or, to risk money on the trade, I should say, because we don't look at trades as an opportunity to make money. We look at them as opportunities to lose money. Because naturally, that's all we're doing. We're just putting risk in the market to see if our directional bias is correct. But that would be the only way you could play it. Usually in the news, we do what's called a liquidation break strategy, where we wait for a daily low or a daily high to be liquidated, and we take the opposite side of the trade. Once again, I am long, so I cannot partake in that. On your core PCE price index numbers, last month we came in at 5.2%. The forecast was 5%, and it came in line. 5% lower is good. This is core inflation numbers that the Fed likes to look at. Last month we had 6.3% on the year over year, and then actual was 6%, so that came in 0.3 of a tick lower, which is good news. Lower inflation is good news, and especially on this number. All right, so you can see here where we've kind of been just straggling here to come lower, and then on the top number, if I pull this up, you're going to see that this actually is climbing. So I like the fact that it's down from 5.2%. I'm guessing 5.1% was the previous number, but that was revised up to 5.2%. So last 3 months we've been climbing on the core price or the core PCE. A lower number is always better as that marks inflation. And next week we should have the real number, the CPI number. Tomorrow we will have non-farm payrolls, so we will go live for that. And we are going to try to get live before the damn news comes out, not after. Because this was a tradable event. It very much was. You know what I mean? We can talk through it real quick. Basically, this was your high of day right there. So what you would have done is you just would have waited until the wick got back under it, and then you just hit the short button, stop above there. Right now, you'd be in a 2-to-1 risk to reward. You could shed your risk by taking profits, 70% of the position, and moving your stop to break even. And then wham, bam, thank you, ma'am. The trade would be over, and you would have booked simple gains in the P&L today. And that is all we try to do on a consistent basis. We take small base hits, and over time, that money compounds and makes us profitable. Thank you all for being here. Once again, apologies on the delay and the late start. But as you can see here, that would have been the way to play it. And I mean, it's no different than what we do all of the time, right? All of the time. Naturally, at 9:30, I do expect this to probably find support. But we've had, like I said, yesterday was a really, really blusterous day to the upside, taking out a lot of massive swing highs here. So the short squeeze is on. If it is going to be a short squeeze, I would naturally expect to see prices continue up today, not down, right? So when you take a short and you're against the near-term trend, when I mean near-term, I mean near-term, the last 3 days, order flow, then you want to get in, get out quickly, because counter trend usually doesn't work that great. As far as intraday support levels, you're under today's support right now. So right there would be intraday support. You can see it's 2-hour, 1-hour support. Old resistance is a step down to 16,893. So we could put this here like so and say this is where we would expect price to find support. It doesn't have to even get down there. It can absolutely find support here. But I would expect this to continue. Like I said, now that you've gotten that move higher, which is the move we were expecting. I have to pull up Thinkorswim because I had to do a restart and everything to try to get this thing to work this morning. That's why I'm running late. All right. So when I built the PC, I made the mistake of forgetting to put in the Wi-Fi antenna. So I had to buy one of those extra ones that just plugs into the USB portion of the computer. And those are not nearly as good as your standard Wi-Fi antenna. All right. So beautiful. All right. So give me a second to let that pull up over here on the other monitor, and we will absolutely take a look at that and go over why we were expecting it to go higher. Yep. Big Boozer says consistent gains. That's what we're about, baby. We're on the gains train. Naturally, the stock market isn't open yet. A lot of these big newsprints, for whatever reason, like to come in an hour before the market opens. But the banks open at 8 a.m. for trading the foreign exchange rates. Let me maximize this sell. All right, let me bring them on over here. All right. Oh, this is just your options expected move chart. Basically, every single week, every Friday, you have your options expiration. That expiration has a move priced into it. So if we go over here to the trade tab and look at all products, let's get rid of this briefly. You can see here is your options chain. These are your weeklies, quarterlies, monthlies. It's all of them, right? That's all the options that are available to trade on the SPY. If you look over here on the right-hand side of the chart, you will see the options markets priced in expected move. So if you find out today is the 1st, so happy December, everybody. We do have a new monthly open today. We'll discuss that a little bit here in a little bit. But we do have a new monthly open. So tomorrow would be the 2nd. That is Friday. That is the week or the close, right? So if you come over here to Friday and go all the way over, you can see that there's a $5 expected move, either higher or lower. And that is from Friday's close. So from Friday's close last week, the market was pricing in a $5 move higher or lower. That isn't accurate. It's more like a $10 move is what the market was pricing in this week, higher or lower. The reason it just shows $5 now is because there's 1 day left. All right, so back to the chart. All right, so that is delineated by the red and the green lines, that number. So basically, here is Friday's close. That's what the black line represents or indicates. And then, $9 or $10, whatever the actual move is, higher would be your green line, and then $10 lower would be your red line. And you can see how occasionally, not every day, and especially not in a bear market, because you have heightened volatility, so it is possible that price breaks out of this expected move. You can see this week here on Thursday, you gapped up, opened above the expected move range high, and traded up all day. This is a short squeeze, right? This is a short squeeze, because what a lot of people do is they will take trades just outside. So if you're a premium seller, right? If you like to sell options, being a premium seller, then a lot of your trades are going to be taken outside of this. So what I mean is you would be selling puts under 367 and selling calls above 385. So like 388, 367, and that's a spread. And basically what you would want is you would want the week to close out inside of this range, and then whatever premium you sold, you will get added to your P&L, right? I suggest if you are going to sell options, make sure you understand the amount of risk that you are taking on, because some options trades, like if you just sell one single call or one single put out of the money or out of the range here, you are absolutely risking an unlimited amount of money. So there are ways, though, with options that you can buy calls or puts to fund the trade, if you will, or by selling the calls or puts, you could fund the trade by using that premium to then buy a call or put, and that would limit your downside exposure. So yeah, there's many different strategies to trading options, but basically, we wanted to see the first couple days of the week be bearish. We discussed this in depth on Sunday's live stream. We discussed this in depth on Tuesday's live stream. Now, Tuesday's live stream was cut a little bit short because I had an electrician coming over. He was supposed to be here yesterday. Again, he did not show up. He will be here today. Hopefully, he shows up after we're done streaming, though. So I might have to cut it short again today, but if so, it's okay, because tomorrow we will be going live before non-farm payroll gets kicked off, because we definitely want to be trading for that news event. And we do trade all news events, the high-risk news events. Those are our bread and butter. That's where we like to operate, because we can risk a very small amount of money to see if it is going to play out. And it generally does quite consistently. But we were looking for price to trade down into around this area. The main reason was based on not the options market expected move, but on weekly support. So what I mean by that is this is weekly support right there. So if I go back into the daily, just give my internet time to catch up. There we go, into the daily. You can see how you were trading down into it. Now you do have daily support here. So if there is a daily support close to the weekly support, then by all means you can watch that level as well. So these two white lines is the area of which we were kind of looking for price to trade down to, and it came in pretty nicely this week with the downside expected move. So whenever you have a little bit of correlations like that in the marketplace, then those are the areas you typically want to be a buyer, not a seller. Whereas, most retail would not even understand any of the information that I just discussed. And on this day, they would have been looking for shorts probably at the low of day, right? You never want to be looking for shorts into support ever, because in a trending environment, and if I had a trend line there, you could clearly see that on the daily time frame, this asset is trending up, not down. So in a trending environment, no matter how briefly it is, you typically want to be looking for trades in that direction, not the opposite. Not the opposite. So we don't want to sell the top of the market in an uptrend. We look to buy off support in an uptrend. And that's exactly what we did on Tuesday. This is Tuesday's candle. We bought on support, so we bought down here, and then boom, here we are. Today, depending on where this opens, you will either be gapping up or gapping down. So we will see how this market opens at 9:30. But yesterday's close was $407.68. You can see that here. This is your open, high, low, and close prices. So whenever you put your cursor on that, you can see here is the close. The C means close. We want to see what price it closed, and it was 407.68. I'm not even sure if you can see that. Right there's the close. Yeah, you can see that right there. I know the numbers are small, and I'm not super familiar with the settings on this platform, so I don't know if I can make those numbers bigger or not. But you can just see $407 is the close yesterday. Right now, currently, pre-market, the SPY is trading at $408.87. So a dollar roughly higher, a little over a dollar higher. So you're coming into the top end of the options expected move. So since we had such a big move yesterday, is it possible that we open up today and trade lower? Yeah. Why? Well, anybody who didn't sell yesterday, they will more than likely be looking to take profits on the open today, simply because they're in money. Their trades are doing good. So instantly, it's when you get the market open, it's not, it's not bad to see the market selling off, because a lot of those people will automatically have an open order in the market to go ahead and close out that position and into profits. And that will just that bit of selling will cause the marketplace to have what we call a retracement. And you could trade all the way as low as yesterday's close, where you then find support and move higher. I don't know if it is naturally going to move higher. We never know what price is ever going to do. But, with our strategy, with what I'm trying to teach you, there are better places to look for your trade entries. And I think this is where retail suffers the most. I think they don't quite understand at what time they should be looking for trade entries and at what prices they should be looking for trade entries. All right. They just want to trade, so they'll just jump in a trade any old place inside of the daily range. And that is not what professional traders do. Not. We wait for our areas of interest. We wait for price to get to our areas of interest, and then we use places the market has already told us about. All right, so let's get this chart off because there's really nothing going on here. This is the SPY. And you can see here that it closed the same price. There's your close, 407.68 yesterday. Currently, you are pre-market gapping up to 408.62. This is what it looks like on the 5-minute time frame. What a monstrosity of a day yesterday, ladies and gentlemen. That is a phenomenal upside push. Very, very resemblance, or you have a big resemblance on this push as well. So, yeah, we got them shorts. We got well above them. So, yeah, anybody waking up today that didn't close any short positions for a loss, they will also be looking to enter those positions. But in a lot of cases, they will wait for that first downside push, and that's what they're praying for. This is why we typically, in a short squeeze, want to look for buying opportunities, because once the price gets back down to roughly yesterday's close, for instance, then they'll go ahead and close that trade out for a loss, thus bringing in more demand. So there's different names for these things. I've heard people call them retest gaps and whatnot, but we know what we're looking for, right? We know what we're looking for. So that's what we kind of got going on. Let me bring the dollar back over here. You can see the dollar having a bit of a sell-off day this morning. Coming into the news, then we got the news, and that kind of caused the dollar to do a reversal, if you will. If we go out to the daily time frame, you're going to see what I said clearly is a breakdown on the dollar, which is what we've been looking for on this channel. See, I think what a lot of people are trying to do here is they still want to be bearish. Either A, because they've made a bearish call, so they need the market to be bearish. That way they look like they know what they're doing. But unfortunately, nobody knows what price is ever going to do. So everybody on Twitter Spaces, whatever social media platform you like the best, are making calls, directional calls on what the marketplace is going to do. Either they're doing it out of ignorance or they just are boasting their own egos. I say stuff like that all the time too. It's just what you do if if you have a social media platform and a small following. People want to know what direction you think the market's going to go. And all week, we said, well, the first 2 days we want it to be bearish. That way we can take a bullish entry. That's what we did. And the market just happened to work out for us this week. I'm not always right because I cannot see into the future. Therefore, I do not ever know what price is going to do. And neither does anybody else. But we didn't have a bearish bias coming into the week. And we're probably not going to see that close out red neither. If I pull up the weekly on the dollar, I mean, it's a clear and obvious breakdown. We did short the dollar. We have held a dollar short position since this day, or this week right here. This is the week that we shorted the dollar. We did not short the DXY. I don't have a trading account that will allow me to trade this asset. But the way that I took my dollar short trade was through USD JPY. So right up here, right at the very tip top of that candle is where we took that short. And as you can see, price is moving away from it nicely. All right, so our dollar short is playing out. And I think it's going to be a good trade to hold up into at least Q2 2023. All right. Could I be wrong? Absolutely. One thing about this that has me a little bit concerned as far as dollar short is we're coming into the end of the year. So that means we will be closing up year 2022. So the range of the candlestick for the entire year will be closing. Just like how yesterday we had the monthly close on Bitcoin, we're opening up a new month. These are typically the best times to look for trades, not the day of, but the first week up into the second week of the month. We want to look for entries, trying to determine whether or not the monthly range expansion is going to be up or down. Last month we were down, so and it was down bad. You can see here, this is your last month's candle, and it's a doozy, and it is a breakdown. That is a breakdown. So what I'm looking for on Bitcoin is I would love to see December trade lower and then find support, and then January take off to the upside. If that happens or plays out like that, make sure around January the 1st, you are coming to this channel every day that I go live, because we will be actively looking for potential positions to get in early on in the year and see if we can catch a yearly trend, right? Because that's all I'm doing as a trader, is I am taking entries inside of these candles, and I'm trying my best to get short at the highs of them or to get long at the lows of them. All right. That's all I'm doing. Being a day trader, I go all the way down to the daily time frame. That means I'm operating inside of the daily time frame, but I'm doing the exact same thing on the daily range as I am on the weekly, monthly, and quarterly, also yearly ranges. That's it. We're just looking to max or try to take profits inside of those babies. So on the yearly, this is what it looks like, right? This is what it looks like. Naturally, we were looking for Bitcoin to roll over this year. It did it at the beginning of the year. We were all over that short trade. So next year, what are we going to be doing? Are we going to be looking for downside continuation? Or are we going to look for Bitcoin to put in a reversal and maybe not go up and make all-time highs, but be an inside year, for instance? You could be. All of 2023, you could just trade inside from this price to this price all year long. All year long, you could trade inside of these two areas. And that would be a decent little trade, wouldn't it? Long, take profits, right? Right. All right. So let's go back to the intraday stuff, because that's why you guys are here. You can see that you're now red on the day. Remember that. And then naturally, intraday, we would have waited for the liquidation above this swing high to get short. Boom. So if you did do that, kudos to you. And think about taking profits, because like I said, you're into intraday support. That is your profit taking area. So this is daily res. This would have been your trade entry. You would have been risking that wick that much. This is probably a 2.5 to 3 to 1 risk to reward from the top of the daily or the top of the high there down to support. And you don't look for anything else. You don't get greedy and expect prices down in here. You only target what the market has already shown you exists, the move that exists. All right. So that's that. Now, as far as getting long, like I said, I don't naturally like getting long like this, but you are above any resistances. You are above them. All right. You are above resistance. Next resistance that we would expect for the market to have a little bit of trouble would be 17,553. That is your next daily resistance point. You have liquidated all the way to here. You didn't do that. That's just going to be 2 weeks ago's high right there. That's what you've liquidated, 2 weeks ago's high. Let me just get rid of that. Do it like this. Boom. All right. So that's what I see. That is 2 weeks ago's high. You've liquidated that. The next liquidation point would be that week's high. Oh, wait, no, that's that big FTX candle. So yeah, technically, if it is going to be a bear move, then right now it shouldn't have to go no higher. All right, because you've already liquidated the entirety of this range. All right, you've already liquidated it. So your next liquidation point on Bitcoin on the weekly time frame for the weekly high is all the way up there. Now there are other daily highs you can liquidate. You see what I'm saying? You can liquidate this day because it hasn't been liquidated yet. You can liquidate this day and this day. So you got 3 days there that could highs that could be the upside target. But technically, if the marketplace is going to be bearish, then now would be the time for it to do so. Like I said, because you've liquidated the entirety of the weekly ranges. The day that we were bearish, I mean, not the day, but when we did this up here, we were looking for shorts. The Trade Talk community was looking for shorts. And the reason is because of what I just said. All right. So if we go over here to the monthly time frame real quick on Bitcoin, I mean, this is, since there isn't really a trade for me to take, we'll just do a hard hyper education series, if you will. All right. So on the monthly, all right. So basically we were watching this month's high right there, $21,080. Once price got above that, I told everybody in a live stream that we don't have to go up anymore. So like if it's going to be bearish, now's the time to do it because the next area for liquidations is all the way up there. And this is what that looked like, the market structure on that time. Okay? So basically, by Bitcoin getting above this high, which was what? October's high, the next high to liquidate would have been September's high. Since you've already liquidated October's high, I told everybody that if this doesn't become bullish really quickly and act like a short squeeze, what I mean by that is get more bullish, more momentum, more like of a stronger repricing upward direction to let me think that the market is heading up to there. If it doesn't start to do that soon, I'm going to get excruciatingly bearish on the marketplace. And it has nothing to do with I love Bitcoin, I'm invested in it, or nothing like that. It has everything to do with that's my job as a trader, is to identify opportunity. And that's what I was doing. I was identifying opportunity. And since we did this was a Friday, this was a Saturday. Our game plan on Sunday and Monday and Tuesday was to take a short trade upon the liquidation of Sunday's high, or Saturday's high of $21,478. That would have been our short side entry. And as you can see on Monday or Sunday night, you broke down. Monday, you just barely retested into Sunday's range and you broke down again. But we didn't get the trading opportunity up here for the short. However, we did take the short here on this day, right here at the open. That was that really big volatile day. We waited for Bitcoin to have a big, gigantic doji candle, traded right back up to the open, and we just hit the sell button. Boom. And then that ended up being a fantastic short. So what I want you guys to understand about this community, Trade Talk in itself, we are traders. I am a trader. That's what I do. I don't give you, like, I do have a bias on Bitcoin. Long term, I think Bitcoin's going to be worth more money, right? Long term, boom, there it is. I'm an uber bull. But in order for me to make money, I can't make money by buying a bear market unless the liquidation has already occurred and I'm expecting the marketplace to do a retracement or a return back to the mean, if you will. All right. Then I can look for those long trades, or potentially, Bitcoin's going to retrace, but where's it going to go? Usually it looks for a liquidation point. Once it gets to that liquidation point, then if there is demand in the market, it will move up and look for a higher liquidation point. If there's more supply in the market, then typically once you find a liquidation point to the upside, that supply will kick back in, meaning the sellers will show back up, and then the marketplace will go down looking for liquidations to the lows. All right. So that's all we're doing here. We're just identifying opportunity. And that's why we have such a magnificent hit rate, is because we know typically where those places are. And that's it. That's it. And as a new trader, or maybe you're not a new trader, maybe you've been trading for 15 years, you just never stumbled on a channel like this before, and you probably won't ever. You know what I mean? But I'm not teaching head and shoulders and stuff like that over here, because that's not the stuff in the marketplace that works. Otherwise, everybody would be profitable, right? You do have an inverse head and shoulders here, and I guarantee it, if I could pull up Twitter right now, I could find at least one or two people said, inverse head and shoulders, there's the break of the neckline. And to be honest, you do have that. And if it is going to play out, a measured move on this pattern puts you where? Right there. What do we have over there? Well, we got this right there. Boom. So, yeah. Right now, since we're trading above last week's high, or not last week's, 2 weeks ago's high, the market has not shown us a reversal back to the downside yet. It has not shown us a willingness to trade directly away from that high, revealing to us that moving above the high 2 weeks ago was a liquidation. And now it's looking to reprice back lower. We haven't got that yet. Look at today. That's not a bearish day. It is bearish technically because you're trading under the open, but it's not a big down day, is it? Now the day hasn't even been started yet. You got 15 minutes until the New York stock market opens. So we shall see. But yeah, this is the direction I'm anticipating the market to go, as long as, right? That's what we do here. If this, then that. As long as I don't start seeing nasty bearishness up under this. All right. So for you shorts out there, you still have time. You still have time to look for short entries. You do not need to rush it today. Okay. You do have time. So if the market starts to get really bearish under this, then I would say you could look for a move all the way down to 16.7 at least, which isn't a very big move. I understand that. But these ranges are tiny. They're very small. There was a day not too long ago where we just had like this day here. Look at this. 16,425, and then the high is 16,580. That's what, $150 move on Bitcoin inside of a whole day. That's not a very big move. These are very small range candles. So that means we don't have a lot of volatility in the marketplace right now. Even though we did the other day, we don't right now. And you don't need an indicator to show you that. You can see that yourself. $1,000 move is usually a decent move for Bitcoin, not in a day, but more than $100 move. So we do have an indicator here that will show us that. That's this thing right here. So this is a daily chart. You can see that on the daily chart, you're down. This is volatility. This measures volatility. And volatility's on the lows, not on the highs. See, on this day, these few days here, volatility shot up because the range got big. That's what volatility is. Volatility is the measurement of the move, the size of the move. That's volatility. All right? And momentum, if you will. Same thing. You're just kind of looking at the size of the move. Momentum kind of gives you directional bias, whereas volatility shows you, if it's ready or not. And we are. Volatility's on the lows. You are starting to tick up. Volatility is a directional neutral indicator. All right. It does not go by direction. It simply means that volatility is starting to climb off the lows. Now, if volatility is climbing as price is moving higher, that's good news for the bulls, right? And we know where it's going, or at least we can target where we think it's going. We don't know where it's going, sorry, but we can target where we think it's going. So it all hinges on what it does in the next day or two. Because if it starts to reprice away, and on the weekly, you don't have very much volatility at all either. Even with this big, gigantic weekly candle to the downside, that barely did get this thing to tick to the upside. So in order for your volatility measurement on the weekly to go, you got to really be going. But here's one where the volatility was going higher as price was going higher, right? Here's the volatility's going higher. Volatility's climbing as price is dropping. It's a directional neutral indicator. All right, moving on. All right, so yeah, what I mean by this totally is if you don't start to see this thing pull back, and I mean show us that today's liquidation was legit, then you're not looking for shorts. You're looking for longs. That's just an easy way for me to tell you. You're not looking for shorts. You're looking for longs. All right. So we'll see if the marketplace finds support. And if we break down below the midpoint, for instance, like if we take out this old resistance level here to the downside, then we will be looking to short any retest into resistance. Just not today. I don't think. The short trade today was here, right here. You would have shorted that. You would have been taking profits already. You'd be done trading for the day. That's the high probable move. That's the high probable analysis. That's the high probable trade. If you start to learn my process, and then when you start to understand it, your P&L or your equity curve will stop going down. Over time, it will bottom out, and then it will start its ascent. And once you have an ascending equity curve, that's when you start to really have fun doing this. Really have fun doing this. Because you finally have learned something about the market that works consistently, right? And you are welcome for that. All right. So we're just kind of waiting for the open here. It's 9:24. We do have a few minutes left. So yeah. Oh, no, I want to keep this on the 5-minute for you 5-minute traders out there. For me and everybody like me, we just look at the hourly because the hourly shows you the intraday ranges to perfection. Like, there's not a better time frame, in my opinion, for day trading than the hourly time frame. I mean, you could see it so clear, right? Look how you had your repricing. This is a repricing. You hear me also use the term expansion. That's what I mean. Expansion, repricing. And what we're trying to do as traders is we're trying to nail that repricing or that expansion. But in order to do that, we have to be on the right side of the market. But once you do that repricing, you come into then an area, usually a resistance point, just under a high, usually. Like, you won't do the liquidation. You will trade up to the liquidation and then market will back off, because then it's going to spend the rest of the day building in what I call the operating range. The operating range is where market operators, aka day traders, are operating in. That's where we are looking for our meat and potatoes. If we get lucky enough to nail a repricing or an expansion, then that's just icing on the cake. And then you will have a better chance of doing that only if you're taking the trade with the marketplace. All right. So we don't look for the repricing to happen. We're looking to just operate in the range. And you can clearly see that the range of operation is here. Right? Then what happens here? You come down, find support, liquidate the low of day, up. So the trade on this expansion would have been, you guessed it, right there. Right? Liquidation, break. This candle took place at 1 o'clock in the day. So I would not have been active at 1 o'clock in the day. The sweet spot or the best time to look for trade entries, especially for the New York session, is from 7 to 10. 7 a.m. to 10 a.m. Occasionally, will trades happen outside of 10 o'clock? Yeah, especially if you have Mr. Powell speaking at 1:30 p.m. Eastern Standard Time. So look what the market did. The market opens up off the low here. Powell starts his speech. Price runs down, liquidates the low of day, and then reverses. Where's it heading? What's its target? This. All right, this is its target. Why? Because that's the previous day's high. So the market liquidates the low of day. Then you have your repricing or your expansion higher. Boom, you liquidate the high of day. And then what does the market do? It sets in the operating range, the range for you and I to operate in. You're only ever a buyer on the bottom of the range, and you're only ever a seller at the top of the range. Now, there's two different ways you can approach that. You can be a seller by buying the market here and then what? Selling your position back to the market there. Remember, on the low, you're a buyer. On the high, you're a seller. Or if you want to take a short, you're a seller here and you are a buyer here, because, that's how you do it. But the range here, you can see you did get an hourly close under that previous high. That's okay. Don't use the previous high. Use the actual close. And then you can see right here at 6 o'clock in the morning, you traded down into support. Where was your target? This white line. You would have looked to get long here, and then you would have been a seller there. One minute, ladies and gentlemen. 1 minute. We want these spoos. Give me the spoos, man. And the spoos is moving up nicely. Done. We were looking for a bullish weekly repricing or a bullish weekly expansion. Where were we looking for that bullish entry? As I stated earlier in the stream, we were watching weekly support. This was where we got long. There is the bell. So well done for everybody that understood what I was talking about and that was able to take profits. 396 calls, selling those babies for what? $4 and something change. Selling those babies for $4.05. That's a $10 move, ladies and gentlemen. $10. If you own 100 shares, you can do the math. Because that's what one contract of options is. It's 100 shares. All right, so the S&P 500. Let's get over here on the 5 minute. So we can let's get our levels here briefly. So what I mean now, since we're above, what are we above? The highest week. The highest week was here. Now that we're above that, any retracement back down to 40.62 or 40.42 would be looked at with bullish potential. We would be looking for bullish entries there. Where is our next upside target for the short squeeze to commence? 41.58. 41.58. So people are asking me for short entries on the SPY and then or on the S&P 500. They're asking me why I did not sell this supply zone. It's simple. Because I have a bullish bias. When I have a bullish bias, I do not look to sell it. All right? So if you were looking to get short there yesterday, you more than likely got ran over. I don't think that it's time for selling, but we will find out in the next few days. I thought for sure November would be a bullish month on the SPY, and it was. There is the bullish month for the SPY. And since you closed so damn strong in November, that is today, you just had the monthly close, and you closed so damn strong, this is my next upside target, 41.58. All right? So you want to be buying off support, not selling off resistance. If not for FTX, this is what Bitcoin's month would look like as well. That is my opinion naturally, but it's a pretty damn good one, I think. Because up until the time FTX did what it did, we seen a very, very strong risk-on correlation with Bitcoin. Let's use this one on the hourly. You can see it does look like it may be wanting to run back above those highs, which is why it's so vital whenever you're trying to short against order flow that you take profits quickly. Because the longer you leave that risk in the marketplace, that makes the likelihood of you being stopped out far more likely, right? So the goal is to jump in with your risk, take your money and run. Don't give the market a chance to make you a victim of random market violence. That is my term, random market violence. That's all we can say it is, because we don't know where it's going to go. We can just make an educated assessment. So let's see if it does indeed find support here. This could end up closing below because traps exist. And whenever you take out a support zone with a close, that typically means that you either A, you're breaking down, or B, a trap is being set. The traps are better to identify on a daily time frame than an hourly time frame, though. But if you do close below and then in the next hour you just find resistance and roll back over, then what you have is downside continuation, and then you won't be looking for support again until at least there, because it's old resistance, intraday resistance. So if we close under this near-term support, then we will be looking for a repricing back down to 16,952. As long as it stays above this support, then we will be looking for a repricement back up to 17,321. There's nothing for me to do. Like I said, I'm already setting in calls on the SPY, and I'm already setting in a long position on Bitcoin from 16,4 or 16,344 from here. So that's all I did, right? We had support, intraday support, tested it, held on this candle. I got long, stop there. As price shot up into here, I took profits, moved my stop to break even, and left 30% of the position running on. So that way, if we get a repricing to the upside, all of this just becomes icing on the cake. And this trade will pay you more than this trade did. Right? All right. And that's a beautiful thing when you really fully comprehend that. When you fully understand how I made more money on like no risk than I did when I had my money at risk. It's much funner. Much funner. So we'll see here if Bitcoin ends up holding support. It is definitely looking like it's trying to. If you look at the 5-minute, you're going to be selling here, right? You're going to be like, oh, this is going down. Look at that. Look at that. This is bearish, man. But looking at the hourly, you can be like, yeah, it looks a little bearish, but you haven't broken down below support yet, so it's not really that bearish, is it? I mean, you've broken down. Price did trade under support, but the close is what matters. Where did it close? It closed back above support. You're just going to learn how to operate inside of the candle body's structure of the marketplace. When you find your objective resistance levels like this and your objective support levels, you'll know when that support is broken or that resistance is broken once you have a candle body close above it or below it. And then you get that directional continuation. So I'm not going to close my long position until I see a reason to close it. And I probably won't see a reason to close it because I am more operating on 100% profit right now. It's all profit. So the only thing that I am risking by leaving the position open is unrealized P&L. And then you can learn how to manage those trades yourself. You can decide what What percentage of the position do you want to close? What percentage of the position do you want to leave on? But I strongly suggest you trade this style instead of anybody else's, because it is probably going to generate more long-term equity growth than anything else you're doing, or anybody else's strategies you're following. All right. And for those that have been asking about the Patreon and stuff like that, I don't like shilling, and it makes me feel all icky and stuff. But I would rather, if you did want to be a member of the Patreon, I would much rather you do it now, because Patreon does their billing on the first of the month. So anytime after the first of the month, like the second, for instance, tomorrow, you can sign in. That way you don't accidentally get double billed. They did do something new, but I just haven't looked into it yet to maybe change that around. But yeah, Patreon's done a few different things. I should just make my own website and do it that way, but for now we'll just use the tools we have. Oh, did not mean to hit the mic. All right, so yeah, that's that. Also, we use Bitget, the exchange Bitget. Now, with everything that went on with FTX, it's not really, I don't like talking about exchanges too much, but I do use that exchange. But I don't keep a lot of money on exchange because they have up to 125x leverage. So you can leave a small amount on exchange and just lever it up, instead of leaving your life savings on exchange for potential loss. Right? If they shut their doors tomorrow, or if the website closes down, you can't get access to those funds. You've lost them, essentially. So I strongly suggest you leave the biggest portion of your wealth intact and in your own hands, in your own custody, and only apply a small amount of your trading capital on exchange, because you can lever it up. Like I said, the best example would be if you have $100,000 of trading capital, you want to only put like $1,000 or $2,000 on exchange. So that way you can use high leverage, 50x, 40x. And then if you lose the entire $1,000 because of a busted trade, well, guess what? You only lost 1% of your trading capital. Now, I understand for you guys out there that have a lot less money than that, it's going to be far more difficult for you, because like if you've only got $500 of trading capital, you can't exactly just put $5 on exchange now, can you? Right? I mean, you can, but you're not going to go very far with that. I understand that. If it was me, which it used to be me, I would just put it all on there because it's just a couple $100. I understand that a couple $100 for some people is a lot of money. It's just that's just the way trading is for. It's usually for more experienced investors that have already got money or have really good jobs or whatever. It's not really set up for the poor to play around in. But with the technology we have nowadays, the poor can do it. I just leave that up to you. But anyways, there's a link in the description. Make sure you use a referral code XTSC. That is X-Ray Tango Sierra Charlie. S&P 500, you can see here, after getting a little bit of a push down. Let's get the SPY over here. Maybe. Oh, whoa. That's me. One of these days, somebody will lay some fiber optic cable through here. Gone will be the days of the dial-up. It's not dial-up, but sometimes it acts like it is. All right, so there's your market open. This was your news candle there. So the market took that news as bullish. You can see here that you do kind of have like that 5-minute bearish candle right there. I wouldn't suggest you get long at that because 5-minute candles don't really hold support. Occasionally they will. And on my earlier videos, I showed people me taking entries based off of 5-minute supply and demand. It wasn't, I'm using my same strategy just on a very small time frame. It was just basically showing off, if you will. I don't, unless that 5-minute level candle is on like a higher time frame support or resistance, I wouldn't be looking to do something like that. And on Bitcoin's current situation, it is. So you can see where that hourly support is. So like, say for instance, if we put this on an hourly, I wish I could draw it here and it shows up here. But this is the support you are currently watching on Bitcoin on the hourly. I do not know if there is a support on the SPOOs or not. Good mornings, lots of good mornings. Good afternoon from Nigeria. Welcome, my friend. Welcome. Good afternoon. Core PCE pumps and dumps. Yeah, smash the like button, says Ray Vargas. Yeah, if you guys wouldn't mind doing that, I would appreciate it. Naturally, it's a free way for you guys to kind of say, hey, I like the channel. Other people should too. We'll see. There's an old resistance level there, but there is no support there on the SPY or on the S&P 500. Support is all the way down to 40.67. But the last hour broke out above that candle body, so that could be indicative of higher prices. Turn up your volume, Heath. My volume is turned up, my friend. It is turned up as loud as it can go. I can adjust the gain on the microphone, but it's turned up pretty loud too, so apologies. If I go much louder, there's going to be an annoying hum in the video. Saigon, Vietnam. Wow. We literally got people from all over the world in here. Thank you guys so much for being here. I'm going to ask for his Patreon subscription for Christmas. Guten Morgen, says Zach. Good morning, my friend. DXY dropping below the 200 DMA, first time in 18 months. I'm not sure what the DMA is. I use EMAs and just MAs, simple and exponential moving averages. Well, we can see where it is in regards to that. We did know that we were retesting the 200 simple and the 200 exponential. Here is your 200 exponential and the 200 simple. Yep, 200, 200. Hit OK. Turn the babies on. And there you go. So yeah, breaking down below the 200 moving averages in a long time. You are correct. So, I mean, I don't understand what other information or other indicators people need in order to say that the dollar has broken down. But typically and technically, under the 200, that is a breakdown, really. I mean, I operate a little bit quicker. I watch the 21 exponential as it has a really good track record of keeping the trend intact. You can see once you broke down below it here, and you are trending to the downside, how the 21 acted as resistance on this day, then down, and then got up into the supply zone here, but ultimately not quite the 21. Would that have been a good entry? Potentially. You're getting a little bit extended, and then down here you can see that the marketplace on the daily time frame was building in support. So getting short at support is never a condonable idea for me. You're never going to hear me say, yeah, I think you should get short at support. I say the exact opposite. Never short at support. Wait for it to break down, and then look for the next area of potential support. So currently where you are on the dollar, you could reach as low as 103.80 down here. Then you can wait for a pullback up into this, up in here for resistance, maybe, right? But you don't want to do it while support is actually being built in. I do it sometimes, though. I mean, sometimes if the trade setup looks good, which I usually know within 5 seconds just by looking at the chart, if I like the idea, and if I do, even if it is into support, I will still take it, because I know that I'm only looking to operate inside of the daily range. So inside of whatever the range the market has already built in for me. Here we go. We're making that push above the highs. Also, I believe Bitcoin's risk on correlation will come back to the S&P 500. So it's just a matter of time for that to happen. When it does happen, I can imagine that we're going to see a rather large repricing take place to the upside, to basically get back that correlation it lost due to FTX. And if you're not following me on Twitter, make sure you do so. Trade_talk_ single underscores, or you can just click down in the description and just follow me that way. It takes you straight to my page. I have a very difficult time getting people to follow me on Twitter for some reason. But I do put useful data out on Twitter occasionally. But let's go over here and look at, let me see here. Let me pull up Twitter and I will show you some. We've seen already some on-chain, and it wasn't a day after I posted that on Twitter about how on-chain data is showing that we potentially already seeing some capitulation happening. Glassnode, which is a supremely good follow on YouTube, posted a video about potential capitulation. So I'm just saying, like, I'm not the only one looking at this data. Other people are looking at it as well. The timing was perfect, though, for me. Flawless. I had it out a day ahead. A day ahead. Just kidding. Right here. So, keep the narrative of people still waiting for capitulation to be a buyer. I believe if you're waiting on a big capitulation candlestick, you're going to be late to the party, right? And then I said, how will you identify that capitulation? Because it doesn't always look the same. It doesn't. No candlestick is going to tell you if it's capitulation or not. Just because it has a big wick under it doesn't mean anything. And then what if it already happened? So these charts are suggestive that we've already seen capitulation. Here's your SOPR, which is a spent output profit ratio. You can see how you get these big spikes to the downside on the orange line in, bear market capitulations. When we had that capitulation move back in March 2020, you had the spike there. Notice how none of these lows gave you that big gigantic spike. None of them. Not even the first low of 26K, which ultimately was my bear market target. You didn't even get it then. But now you've gotten it on the FTX dump. There's your capitulation. This also shows that capitulation here. You can see on this chart, I got rid of all the smaller time frame coins because those are near-term holders. When we're looking at data like this, you want to look at it in terms of old coins. Those are your whales, if you will, your longer-term holders. So these are long-term holders down here. They usually, you will see a spike for profit taking, just like you will see a spike for capitulation areas. And then down over here, you can see massive spike there. Not really a spike here, right? Nothing there. There was a little bit here, but nothing like what we've seen here. This is capitulation. Remember, capitulation is when everybody's done. It's not just one or two people. It's like, I can't take this anymore. I'm out. Boom. We just know from historical data that usually that's when it's time. That's, when you want to be a buyer. Now, we have mistaken some of these lows in the past as capitulation. I'm human. I get stuff wrong, right? I make mistakes, but I think I have a very good case here for now that we have seen capitulation. So we're probably pretty much just going to be looking for that moves, that repricing back to that risk on correlation. Here you got, this is the realized profit and loss ratio. Oh, basically anything in the red means that these are losing traders. In the green, that is profit taking. All right. That's just the way to look at this chart. You can see back when we lost 6K, you had a lot of people that were setting in losses, went ahead and realized those losses. That is capitulation. When losses get realized, that's capitulation. But you got an all-time low spike here that happened there on losses being realized. Just a small little caveat of what I do on Twitter occasionally, right? I'm mostly a price action analyst, though. There's far better people to follow for on-chain analytics, but there's nobody better for candlestick analytics, in my opinion. There's not a better analyst out there than me for price action. So yeah, moving on. Bitcoin's not really doing a whole lot, but so far that support is still holding. We got 2 minutes left on this hourly close right there. So typically, like, these are the areas where I would look to be a buyer, but I don't like being a buyer at the top of the daily range. And also, let's get an idea of where all of the sellers are. It looks like all of the sellers are at the point of control. So they're taking a short trade in the middle of the daily range. And it doesn't mean that this is only sellers. This is buyers and sellers. But the point of control is where the most volume has traded thus far per day. We only care about session volume profile. We just want to know where the buyers and sellers were for that day, because it helps us with future directional biases. You can see how yesterday the point of control was near the top of the range as well. So if it's more selling than buying, once price gets above it, you know that there's a good chance you could see another rapid expansion via the short squeeze, right? So that's, we look at it for that metric. And also, we just want to know Is there more selling or buying going on? So we can find out, because you can turn on the number data if you want. All right, so let's see here. Why is it? There we go. So right now, currently on the day, we have 9,241 Bitcoin bid and 8,082 Bitcoin ask. This is your bid. This is your ask. So currently inside of this daily structure, we have almost 1,000. Well, not quite. Not much, right? It's pretty damn close. It's almost even with the buyers and sellers. And since it's at the middle of the range, this would be a decent spot to look for bearish entry, just as long as you know you're taking profits right there. So it's not a very big range for you to make money in, but if you can squeak out 4 or 5% out of that, it's a fantastic range. Welcome, Mr. Ron Patterson, becoming a member. We do live streams for the community once a week. I'm not exactly sure. All right, I'll have to look. Sorry, but thank you very much for becoming a member. So you got a higher resistance up here from yesterday's range. So if you lose this resistance, this would be the next place to look for the sell side entries. But if you did want to take a short there, this is your target right here. All right. Once again, that short would be at resistance 17,137. You'd be taking profits just $137 lower, because that's the range. Unfortunately, it's a very narrow range. But if you're right, when you take profits and you move your stop to break even, if you do get downside continuation, if you do get a repricing down to here, that is cherries on the cake. We don't expect it, right? We can never expect that to happen. So we can only do what we basically, what we see happening, right? We can only take the trade, and we can't expect anything more. We don't even ever expect the trade to work. We find these places, and we're like, and we're not taking this trade based on the point of control. All right? Don't get that misunderstood either. I don't want you tomorrow to be looking to get long or to look to get short at the red line. The red line just lets us know where the majority of the volume traded that day. The reason you would be getting short there is its hourly resistance. It's an objective price that the market has dictated to us. And since this close, you have not closed above it, right? So that's when you would have an invalidation of sorts on your trade. If you got short there just now, a close above that would invalidate your trade. It would invalidate your position, essentially. Because once this support was made, you haven't closed below that either. So this is clearly the operating range to look for those trade entries. The Discord is the hedge fund tier inside of Patreon. The hedge fund tier. It's a little expensive, but it's less than $1 a day. Less than a cup of coffee a day. Can I look at Tesla? Yeah, let's go look at Tesla. Nice big move. I did get long on Tesla last week, twice. Both of them were profitable trades as well. I got long down here at support, and then it ended up gapping up the next day, so I took profits there. But I also got long on this Friday here, and that trade didn't play out so good. No, it wasn't this day. It was a bearish day. Yeah, it was this day here. Because I bought it like on this liquidation wick, and that's as high as it, that's where it ended up closing on the day. So from there to there is the profit that I made on that one. On this one, I bought down here, and I waited until this day opened up. Not this one, this one. So when this day opened up, I took that profits on that. That was a better trade, much better. So if I am correct in thinking that, you know, a lot of these things have probably found their lows, then you're going to be watching Tesla for potential buying opportunities on pullbacks into 180.19. That is weekly support. Remember, the weekly support levels need to be, you got to get closures above them on a weekly close. So you can get long at this level and anticipation, but give yourself at least room down to this swing low for your stop. So like if you want to buy Tesla as a swing trade, like a longer term hold, then you would be looking for buying a 180 test. If you start closing dailies under it, then maybe close the position for a small loss. See where the daily support comes in at. Because if I go back into the daily time frame, you're going to see that that weekly level is probably above a few daily candles. Nope, the daily's closed right on it, right perfect. Once you, here's the breakdown. This is your trap right there. Oh, there's weekly support. There's the close on Friday. Friday, November the 18th. You had your close, boom, weekly close. Then Monday, you gapped down, pushed lower. That's when I took the long trade on this day, Tuesday, after we liquidated the previous day's low. Boom, long. You can see how you traded right back up. Tag that, and now you're expanding. So any pullback into 180.19 could be looked at for bullish entries. You might not get there. You might only get as low as 184.99. So watch either of these two prices here. And a daily close under 184.99, leave it alone until you get down to 180.19. All right? Because this is still structured rather bearishly. You're still under the 50, Michelle. All right? Under the 50 means, you're still not bullish. And then here's your 21. So yesterday you finally closed above the 21 EMA. Could you watch the 21 EMA for potential entries? No. But you could watch this price for potential entries. 190.72. I would wait on the deeper correction myself. I am looking for another entry on Tesla. I actually did buy a few more shares too to add to the portfolio because Tesla is one of those stocks that I hold long term in the portfolio. So when I trade Tesla, most of the time I'm using options. Even if I don't say that I did it with options, I did it with options because I don't want to destroy the, the cost basis of the original entries. All right, so that's what Tesla looks like. Still rather bearish. You're very bearish over here. But I mean, a 200 weekly, a test on a 200 weekly is not bad. It's not a bad place to be a buyer historically, right? Historically. If you go and look at Tesla on the weekly, historically, it's been a decent place to be a buyer. Now, you did break down here, right? But that's March 2020. That was the pandemic. That was a a rather outsized move to the downside. But historically, 200 weekly tests are good places to be a buyer. And then there's your last one I can show you, because it takes 200 weeks for this line to populate. It starts right here. So from here back is 200 weeks. So yeah, I mean, historically it's been a good place, but you just have to keep that with the caveat of, yeah, but it is possible for it to trade under the 200 on a weekly closing basis for multiple weeks. But yeah, you're in a good area to be a buyer. Just, I don't know how much capital you plan on risking for the position. Just make sure try not to risk a lot on it. Like, I hold probably about 5% of Tesla shares in the portfolio. Maybe a little bit more than that. But my portfolio is skewed more towards growth. That post that I posted on Twitter, that's an actual strategy. Another one that I posted yesterday that just doesn't, I mean, it's okay, but this is what you guys should do. Like, if you have a lot of spare money, run a screen. And what you're looking for is the SPX, the companies inside of the S&P 500. You're screening for the highest momentum, highest value, lowest volatility, and highest profitability. All of those are metrics to screen out. Once you have those, you just buy shares from the top 50 companies, and in every quarter you run that scan again and rebalance the portfolios, because some of those companies will no longer be top 50 that you own. So you will get rid of those, and then you will add new ones. And you just do that over and over and over. And it's a once in a quarter. You do it. This back tested has beat the S&P 500 for 20 years. Also, this strategy, we had a higher rate environment back in 2019, I think. 2017 through 2019, we had the FOMC raising interest rates back then as well. So this portfolio will perform in a higher interest rate environment. It's growth. It's not growth. Sorry. It's more, what is it? Value. It's more value than growth, right? It's more of a value play. But if you just run that scan right there and search for those parameters once a quarter, so you will be touching the portfolio 4 times a year. Rebalance it with the new companies and get rid of the stinkers, right? Do that every quarter, and that outperforms the S&P 500. And you can have that for free. All right. Let's get back over here, because Bitcoin is slightly coming off. While the internet is thinking, we can see that the dollar has made this breakdown roughly the midpoint of today's range. That's typically what we want to see. That means it's a legit breakdown. But we got something going on here. Something's going on here. This is the reaction I typically or did not really want to see. Because remember, we just liquidated a very... Well, no, we didn't. So on the SPOOs, it's different. Right? On the SPOOs, this is the area of liquidation. So we don't want to see the SPOOs get back under this down here. So we're still okay on it. And Bitcoin isn't really as volatile. So like I said, you can see here earlier on the short entry that we were discussing, that was your entry. This is your take profit. If you took that trade, move your stop to break even right now. Take profits, move your stop to break even. And then anything that happens from here will just be icing on the cake. Cherries and icing and coconut shavings and peanuts and anything and everything you want to put on that cake. All right, let me read some of these questions. Oh yeah, I read that. DXY, yeah, we heard that. Good morning. Good mornings. Lots of good mornings. Dogecoin long opportunity, maybe. I don't know. Yeah, maybe. If Bitcoin is, then Doge might be too. I'd have to look at Doge because a lot of the charts don't do exactly the same things. Most of them do similar things. Just bear with me. We got to look at the longer term here. No, Doge was a buying opportunity. It's not now. Now you're in the midst of either a pullback or something else. So once you got above this swing high here, you would not have been looking to be a buyer, because notice how once you liquidated it, that's when you rolled over, right? That's when you rolled over. Now, this is support unless you close under it again. So you could watch this area for a potential long opportunity. If the long trade's going to be, if the trade is long, your next target would be 17 cents. So from 10 cents to 17 cents. Actually, your first target would have to be this previous month's high here. But you've liquidated that. So let's go down to the weekly. We got to drill in to see what's going on here. Yeah, no, definitely not a long, because you're under that week's high right there. It could find support, but we don't like to see the market stall out at these areas, because when it stalls out at the highs, we know that, it could go lower, much lower. What I would probably do on Doge, since it's been going up for multiple days, right, is I would probably watch for a short right there at 10 cents. That's probably what I would do. I don't like shorting something that low, but 10 cents is all you can make. You can see how this white line is where I would have been looking for that short. Probably would have done it here on a chance of getting back down, or I would have just watched for the entry at supply there, right? That would have been a good entry on Doge. I just didn't see it earlier. I wish I would have. I would have taken that trade all day long. Every single day of the week, I'd take that. With, this structural, the way that Doge is structured, for sure, I would take that. At 10 o'clock, that's what it was, Film Garden. It was the ISM that's got the markets moving lower. Yeah, it's down. It's okay. We got non-farm payrolls tomorrow. And to be honest with you, after the day we had yesterday, I would much rather see today close bearish, right? Because that gives us a long opportunity going into tomorrow's non-farm payrolls. If non-farm payrolls is anything like what we seen last week, then we got a pretty good estimate that, we might be looking for longs tomorrow for non-farm payrolls. And look where I told you Bitcoin would go down to. There it is. There's the tag. Boom. Like absolute perfection. So that's what I try to tell you guys. Like, this isn't something, I didn't invent this. This is just, all I'm doing is watching the levels the market has already shown us to be levels. They're objective price points. No more subjectivity. Get that subjectivity stuff out of your repertoire. What a beautiful, beautiful test. Would I get long here? No. Nope, because I'm looking for long entries tomorrow morning. Hopefully this thing pulls back and then trades sideways. I don't want to see it give back all the gains it took yesterday, though, as that would have me bearish on the Bitcoin. Very bearish. If we give back all the gains yesterday. If we give back the entire day yesterday, I will be bearish. As long as Bitcoin is trading at or around, say, the 50% retracement of yesterday's range, then I still like it to the upside. So it can trade in this box right here. And hopefully it's trading at that box tomorrow morning when we have non-farm payrolls. Hopefully we're in here. And hopefully we're trading up off of the low of day. Right? Because then we can target the low of day for a long entry tomorrow. It would be a fantastic, beautiful setup. So being bearish today is okay. It's still in line with a bullish theme. Now, if we get really bearish tomorrow, like I said, then we'll probably be looking for shorts. But we'll see what tomorrow brings tomorrow. All right. But this looks good. This looks good. I would rather not see a pullback after a liquidation. Always, 100%. Not. I don't want to see that. I want to see a bullish reaction above this stuff, because that tells me that the short squeeze is in fact taking place. When you just get a slight push up, and why just this wick? Why this wick? Why did you close right there? Do you think that that's a coincidence? No, it's not. It's that 2 weeks ago's high. That's why. It's the highest wick. That's why. You traded up above it, stalled out. Then today, we liquidated yesterday's high and reversed. That's not a very confidence-inducing short squeeze, if you will. Usually on a short squeeze, you'll get a breakout above the liquidation point with bullish continuation. But this was an unusual week in the fact that we had 3 days of back-to-back-to-back important, key, crucial economic data points. GDP Wednesday, PCE yesterday, NFP tomorrow. Right? So, all in all, still good on this. If we get back under this, then it's not going to look so good to me anymore. But we already have a longer term narrative on the S&P 500. What we're waiting for on this is for a breakdown back under the weekly 21. Right there's your weekly 21. Let me turn up the volume. On the color. So right here, if we get a breakdown under the 21 exponential, then we will be looking for a selling opportunity at roughly 39.92. If we get a weekly close under this here, and we get a weekly close under this price, we will be looking for a retest of this price to get short. But this is a setup that, if it plays out, will take weeks to do. It's not something that we're looking for tomorrow. This is something that could take up to 5 weeks to set up. All right? We have plenty of time for that. And we won't nail the absolute top, but you're trading at 40.56. 39.92 is only $50 lower. 50 handles on the S&P 500. That's not bad. That's almost the top. And then if you have a bigger bear market, then guess what? We're going to be short up here. Not bad. Not bad at all. But we got to let all that play out first. We're long until that happens. We are long and strong until that happens. All right. Since the weekly open is so close to that high, well, I'll just put 2 lines on the chart. These are the 2 levels that I'm going to be very, very keen on watching moving forward. And once again, I would love nothing more than to see price close today above these 2 prices. If that happens, then tomorrow for NFP, regardless the number, I will be looking for a liquidation of today's low, and I will be buying there. If we close under the open of this week, then that means you're red on the week, and that's not very, very good. And it doesn't have to go far for that. You can see the margin of error here is very narrow. So dollar looked good, made the midpoint the breakout, but where does it close today? That's going to be the ultimate key. Like if today closes up above, then that's going to look nothing more than a rejection of a liquidation. But I think you're good. I think we're good. I think tomorrow, hopefully tomorrow, this thing will be trading sideways and choppy the rest of the day. Like trade up, boom, 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 and be somewhere in here tomorrow around 8 o'clock in the morning, which it's all the way over here. Right here. Hopefully we're trading somewhere in here tomorrow morning. And then what we'll want to see is a spike down. We'll get long up. So that's the game plan for tomorrow. But we will be live tomorrow, barring I get my internet to work. But I will start working on it much earlier. I just remembered that PCE was today, 5 minutes before PCE actually happened. "15 minutes before it happened is when I started trying to get long. And Steam, for whatever reason, Steam is downloading updates for Modern Warfare 2 automatically, and I need to figure out how to turn that crap off. I'm new to PC gaming. Don't know much about it. But, yeah. Brian, my internet is so crap right now, man. It's difficult for me to just pull up 100 tickers. Let me pull up one of them. EWGS. I would stay very far away from this, man. It literally has no liquidity in it. None. I mean, the chart looks like crap. EWGS. EWGS. Yeah. I wouldn't be trading this because it doesn't have any liquidity in it. It's got to be this, maybe. No, it's this. Yeah, I would stay away from this. When you see intraday charts look like that, nobody's trading this. Nobody. Like today, you've gotten 2 ticks. A tick pre-market and a tick now. That's not. You probably couldn't even take a huge position in this. That's not good when you see ticks inside of a day. Like the stock market's open. This should be moving, but it's not. No liquidity. EWY. La 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 la. All right, this one's a little bit better. See, it just takes me forever because so much of my bandwidth is being used to stream. I don't know what you want to do with this. I mean, I don't know enough about South Korea to even invest in it. The chart doesn't look good. I mean, 1, 2, 3, 4. Let's do it this way so that way I don't sound like a complete and total moron. So for 15 months in a row, damn near it, you've been bearish. So yeah, maybe you get a small bounce, which you've already gotten. You're into resistance. Are you shorting this? I wouldn't be shorting it because you're above the 21. I would be looking for support. And right now, that's support. 58.05. If you get a weekly close below that, you're coming all the way back down to 48.40 potentially. Or at the very least, you're coming back to 54.48. At the very least. A close under 58.05, you're going to be looking at $54, which is that wick low liquidation there. If we closed under that, that would be my bearish target. And it's only $4. $4. Yeah, I don't like that. I mean, this top line's good. The bottom line's the weekly open. No good. No bueno. Below that, you are bearish on the week. I don't like that. Bitcoin's not having as rough as but if you look at the daily, this doesn't look that bad either. Yes, I mean, right in between there should be support. There's old resistance right there. Here's the breakout candle. That's the highest resistance level. There's the breakdown, resistance breakout. You should just find support right here. Right there. I would want to see this line hold as support. That's what I would want to see for bullish entries tomorrow. A break back down below the weekly open. I mean, if we're trading bearish on the week tomorrow, I guess you could still say maybe potentially you could look for a support test and get long upon a liquidation of either yesterday's low, today's low, or tomorrow's low. But under the weekly open, you're bearish. That would almost have us looking for resistance instead. But we'll see. We'll see how it goes. This is that liquidation part. But we don't want to lose that because then that makes this a trap almost, right? Which would not be good. Then I would be looking to potentially sell any retest of 40.85 if we close under this today. Then I would be waiting for next week a retest of this to get short. But we're a long ways from the daily close. A long ways. EW back up here, Brian. You're at resistance, bub. Did you liquidate that week? No. So I wouldn't be getting short just yet. See the black space in between that line and that wick? It's not a liquidation. So wait for the liquidation and then wait for price to get back under it. Then look for shorts. If you're shorting it, once again, I wouldn't be shorting it. I would be waiting on support to get long because this has changed. Traps do exist, and I understand that. But for now, just going on what I see right now, I wouldn't be trading this. COPX, and then that'll be it. It looks good. It looks like you changed trend down here, and it's took many weeks of consolidation. This is a weekly chart, and finally you're getting that upside expansion. Weekly support right there, 33.46. Wait for 33.46 to be a buyer. Would you agree that a nice IPA goes well with eggs and hash browns? Yeah. Yeah. It goes real good with hair of the dog. Also, that breakfast on a real bad hangover day, that might be just the ticket, my friend. Sign me up. Yeah, we looked at Tesla. Volume is fine. Yeah, I think your volume is fine. Oh, okay. Thank you guys for saying that. USO hitting resistance. Yeah, the oil trade is done because they are manipulating the supply. They came out and said that they're going to cut supply. So if they're cutting supply, that all by itself means demand will be beating supply. Secondly, oil futures was in contango the other day. That's when the futures price, front month future price of the contract, is more expensive than the underlying spot price. What that tells you is people are buying it more than they're buying the spot price of crude oil. So when the futures price goes into contango, that's demand. That means there's quite a bit of demand in that asset. The oil short was down to the yearly open. We hit that target Monday. So the oil trade for me is done. I'm not looking for more downside. I'm not looking for upside. It's just done. I'm done with it until a new setup brings about. I will not be messing with oil. I wait for my setups to come to me. I do not force setups. And oil is one of those commodities that literally fluctuates based on what OPEC is doing. We're going to bring back supply. Boom, you get bearish. If we're cutting supply, boom, you get bullish. It's simple as that. Let's see what oil's doing today. All right, so we're up 3% today. Not bad. Big day on oil. You're not in contango anymore. CL1 exclamation point are oil futes or futures. You can see that the futures are 82.84. This is the front month contract. That is cheaper than that. You're not in contango anymore, but you were there briefly. And like I said, that just means that demand is coming back into the, and for the last 4 days, you've been bullish. Right? This was the target. The yearly opening range. Right there. We hit it the other day and got a nice bullish bounce. Then price comes down and liquidates all of those early longs and then goes. So like People blame this stuff on market makers and everything else, when in reality, as a retail trader, instead of getting long here, you should be waiting for this, right? You shouldn't be getting long on the first time. Now, that was a nice trade bounce, a bounce. You can get long if that's all you're expecting is just a bounce. You can get long on the first test, especially of the yearly open. I mean, my God, that's a big ass level. So yeah, boom, you're likely to get a bounce there, right? On the first test of the yearly open. But you're not going to close out the year bearish on oil. I don't think so. You might, but I don't know. Under 75.35, you're a bearish yearly candle. Above 75.35, you're bullish. So profit targets were hit right there, or Monday, if you will. Today's Thursday. So it looks like you're going to have a pretty damn good week on oil. Yeah, you're bullish engulfing on oil at the yearly open. See, typically in a downtrend, I wouldn't give a shit about a bullish engulfing candle in a downtrend. In an uptrend, a bullish engulfing off support is a fabulous signal. But in downtrend, a weekly engulfing bearish candle is a phenomenal signal, but not so much in an in a downtrend. So I don't really care about it, but it does tell us one thing. We liquidated last week's high, and now you're trading above, or liquidated last week's low, and now you're trading above last week's high. So it is what it is. People will be watching those three prices. I just see them and know them, but these three prices here, those are the three prices where people will be a buyer of oil moving on in the weeks to come. Be a buyer of oil. That is, unless they decide not to cut supply. If they decide not, which they have already said they were going to, so it's natural that you would get this reaction just based on the supply-demand dynamics. Heath, entry for calls on SPY. I bought 396 calls. 396. There is no entry for calls on the SPY today. Tomorrow, there's potential for a trade on the SPY. The problem is you're going to have the move on the SPY happen pre-market. And with this account, I can't trade pre and post market. I can't buy calls or puts or sell calls or puts after the market is closed or before it opens. So there is no trade to take. No calls to buy on the SPY. No. ISM came at 49. Yeah, lower. Join the Patreon. For any of you that have joined the Patreon, just give me a couple hours. I will get your links to you, I promise. Yeah, a lot of people tell me it was lower than expected, indicates economy's declining, maybe bullish. Well, I don't know if I'd say the economy's declining, because we just got a GDP print that was higher than last quarter. So it's actually climbing, getting better. But it is very suggestive that it's not as good as GDP made it out to sound. We don't really care about what the news is as far as like if it's good or bad news, because the market's going to do what the market's going to do regardless. I've seen bearish news make the market just as bullish as it could be. Usually those are selling opportunities when that happens. Like if the news is supposed to be really bearish, but you get a nasty, big, strong, huge bullish day, look out tomorrow, because that's probably going to get faded. I'm looking at this ISM print to be faded tomorrow for NFP. Can I check for support? Right here is where we're watching. On the SPX, we're watching 40, 42, 40, 34, and 40, 27. 40, 27 is your weekly opening range. 40, 34 is daily resistance. 40, 42 is 2 weeks ago's high. Those are the three areas where we're going to be looking to be a buyer potentially tomorrow morning. Potentially. All right. Potentially. We're not going to do it for a guaranteed certainty. We need to see how the rest of the day closes. Where does it close today? We need to see how did the market react during the London session. These are all data points that we will need to make our trading decision tomorrow morning. But we will be looking to trade tomorrow morning. We will be live 30 minutes before NFP. NFP is one of my favorite days to trade. One of my favorite, because sometimes you can get lucky and nail like the bottom of the month or the top of the month. You know what I mean? So NFP is by far my favorite newsprint. But we will be live for that, as long as nothing happens. How do I get in your Discord? Because you recently sent me a message email, the hedge fund tier, but it asks for a code. I don't know what you mean by a code. What you do is you just purchase that tier. Like you give Patreon a credit card number, and then you buy in at that tier, and then I will send you the link. Once Patreon alerts me that that's been done, I send you a link inside of Patreon. They got an instant message part inside of the Patreon application. You will look under messages and you will find me there with a message, and that's where you would get the Discord link. So if they're asking for a code, then you could be in a country that doesn't support Patreon or something like that. I'm not sure. But I mean, see if you can Google it, find out. You know what I mean? Google, it's my country. If it's not, then we'll figure something out. We'll work something out. There's a couple people in the Discord that I just accept Tether. You know what I mean? They just paid in Tether. The problem with that is it's hard for me to keep up with everybody that does that because I'll forget. There's a lot of people in the Discord that shouldn't be right now. I need to get on that. DXY double bullish div, 4-hour RSI, double bullish divergence. Let's go look at it. We got bullish divergence on the weekly for Bitcoin also. That's going to be down here on watch. Yeah, there is one there, and then this one. So that's what he means by double bullish div. There and there. And there to there. But it goes on the close, so you got to wait for this candle to close, which will be in 12 minutes, and it does look like you're going to have bullish divergence. So you're absolutely right. From this low, even there, one could argue that you got triple divergence. Triple divergence is, oh my. I wouldn't take a signal based off of that because obviously the first bullish divergence signal did not play out. I mean, it did for a bounce. right? I guess one could argue that this divergence signal did indeed play out. So there's your first bullish divergence from there to there. And then from here to there. So from here to here is there to there. That was bullish divergence. After this big long spike to the downside, you did ultimately get a bullish pop. It's like everything else in trading, right? Everything works in trading, just not all the time. Bullish divergences, bearish divergences, hidden shoulders, head and shoulder, other one, all the other usual normal, if you will, technical analysis. You will find that some of those signals do play out occasionally. They just don't that often. Like, it's very hard to make a winning strategy off something that only plays out like 25 or 30% of the time. But you aren't lying. It is there, Googleplex. It is there. Good morning, Heath. Are you watching the World Cup? If yes, no, who are you for? No, Danny. Unfortunately, I am not a soccer fan. I like America football and UFC. Those are the only two sports that I track or that I watch on a normal basis, right? It's just never was my thing. I played a little bit of it when I was in school, but not for like the school team or anything. Just a bunch of kids out in the yard playing soccer or football. I know some parts of the world call it football, but football to me is the pigskin with the field goals, the 100-yard field and the gridiron. That's football. That's my favorite sport in the whole world. American football. Miami Dolphins, if you were wondering, is my favorite team. And then next would have been Washington Redskins, but since they changed their name to the Washington Commanders because of woke politics, I no longer support the team. Period. Ever again will I. Because in my opinion, the name was fine. Still have the Florida State Seminoles. Are they going to change their name too? I understand that Redskins is a little bit more derogatory of a term than an actual tribe of Indians. So Cleveland Indians, are they still Cleveland Indians? I mean, it's just, I don't like politics, and I definitely don't like when politics directly affect my life. And that time it did. So I no longer support that team. I only support Miami Dolphins. And I mean, when I say support, I mean I just buy shirts and stuff. You know what I mean? Hats, shirts, sunglasses, stuff like that. I buy apparel. So it's not like I'm a huge supporter. I don't donate hundreds of thousands of dollars to the cause or nothing. It's just I buy jerseys and stuff. But Miami Dolphins is my team. Hello, traders. I will join the replay crew partying in Florida on the boat. Ready to trade now. Yeah, it's awesome, man. Trading on a boat. I mean, does life get any better than that? Does it? No, probably not. We've hit the pinnacle of our civilization. When you can trade on a boat. Yeah, we're going to wrap it up. We've been going live. We've been live for about almost 2.5 hours now. So basically, we're just watching this. This is where we don't want to see a close below. A close anywhere down under 40.60 would be good for us. All right. And then whatever ends up being the low of day today will be of vital importance for us moving on into tomorrow. Because tomorrow will be a good trade potentially. So yeah, make sure you tune in for that. We're going to try to get started at 8 a.m. So we got a good 30 minutes to go over the analysis and what we're looking for. So that way everybody's on the same page. And then hopefully tomorrow morning we can nail a good upside trade on Bitcoin, or if it presents itself, a downside trade, right? Whatever it is, we will do it. So I'll give y'all a couple seconds to get any other questions in, and then we'll wrap it up. Yesterday was a big volume day too. Volume by time doesn't usually fit my analysis, or I don't pay too much attention to volume by time. But you can see here yesterday, quite a bit of volume was thrown down yesterday. The last time we got, which that could indicate sellers, but that's not a very big selling reaction today. Because the last time we had a very big volume day here, you got bullish continuation, right? Big volume, bullish continuation, because the market's bullish right now. Just from this low to here. You can look at all of your biggest bullish days. They are all incorporated with decent volume spikes. And yesterday's no different. Quite a bit of volume was thrown down yesterday. Doesn't really mean a whole lot of stuff. I mean, it's relevant, but it's not very relevant. Thanks. It does not. Yep. All right. You guys have a fantastic rest of your day. We're going to be waiting on the close today. Tomorrow, we're going to be looking for a trade. We'll be here at 8 a.m. Eastern Standard Time. That's about 3 hours before now, my time. All right. 8 a.m. Eastern, 30 minutes before NFP comes out. And we'll see if we can't nail us a good trade tomorrow. Thank you guys so much once again for being here. Like I said, I will get all you Patreons links sent to you here in a little while. We will see you guys tomorrow morning bright and early. Thank you so much. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.